Hey guys, welcome to today's trade breakdown. Today's Tuesday. Actually not really a significant news day. Actually, before the opening, we also had a inside day. So yeah, more high resistance conditions before the opening. That's the trade I took today, as you already now basically saw. Yeah, I'm going over what I could have done basically differently, what was my bias today, and also why I took this trade. So before we go into the setup, basically in deep or in depth, I want to once again talk first about our higher time frame conditions. So what we have today, as you see, not really an expansion day. We took out yesterday's low, but before the opening, that was not really any realistic target, I think. We are basically still trading around the CE level right here from the daily order block, so mean threshold. We have also a weekly SMT being in play, and also if we drop down to a hourly chart, we can see that we have also a daily SMT being in play right here with ES. So therefore, that's already indicating a more bearish bias. And what's also quite interesting, also really good to see or to spot on the 4-hour chart, is that we have right here SSL liquidity basically right in advance of the new week opening gap, so or basically in the middle of the higher time frame gap. So that's really important liquidity pool in that case, so that we can drop to a 50-minute chart. So we already we really traded higher, created our daily SMT within London basically, and then already had our market maker style model basically in play. So what I mean by that is really left side and right side. So right here basically we are really finished. Looks like a huge penis. Down here we have basically external SSL liquidity, so London lows, and therefore it's really expectable that we have really high resistance in here, also due to the fact that we took out the low right here. But because we basically failed to take out the 4-hour the hourly SSL liquidity right here within the higher time frame gap, but we come this closely basically to it, that's really engineered SSL liquidity, which I want to target later on basically, especially because it's session liquidity as well, so within our New York open kill zone. Therefore that's really important to us. And then we really consolidate in here, and basically right here our market maker sell model is finished. Yes, that's correct. But because we still have basically a bearish bias, expecting that we will see one more move to the downside, sweeping those lows right here, and also due to the fact that we can't really basically stay above the CE level right here, so really just consolidating here, not trading lower. And also if we take a look on the opening prices, we can see that we do not really have a chance to see any bodies above the opening prices. So everything which basically gets traded higher is only an opportunity to go short, and that's really what we can see right here. So smart money is basically selling opening short positions in here, but also, as always, as you know, for me, more importantly, also regular trading also approach. Already marked it out right here. So for my journal basically, so today we have a new open range gap of 100 handles. Therefore, because we are below 120, we want to see that we trade back to the CE level, and that's what we already did with the opening. So that's basically complete in that case. And also what we can see is already that we if we drop, we already on a 5-minute chart, if we see right here that we closed already below the lower quadrant, that's already indicating bearishness. Also the fact that we closed right here below the opening of yesterday's new open range gap, also once again indicating bearishness, but that still can be due to the fact that we want to re-sweep basically the SSL liquidity right here. But once we basically see a close below the SSL liquidity right here, I know, okay, we are going to really basically sell off. We will see lower prices, probably going back to the lows right here, which I forgot basically to mark out. So that's what that was basically my thinking process. What I've also marked out right here is basically the 1 minute inefficiency right here, which basically was really responsible for the high resistance pullback in here, for the deep retracement. But and then we really sold off and traded into previous New Open Range Gap quadrants, and really basically completed our regular trending hours market maker sell model as well, because right here we have also a immediate term high, short term high, and therefore we can expect that we are going to sell off basically with low resistance, and that's what we did basically regarding only our basically what I mean if we regard our move to the downside after our 10 macro, so or within our 10 macro, but what I mean by with that is basically with 10 a.m. we really had a low resistance liquidity run. So not high definitely high resistance in here, but still that's basically our low resistance liquidity run setup. Still, basically I was once again right with my narrative, and kind of a bit a too late entry. Basically, as you know, what I want to see is that we close below CE of the order block right here if I'm going to enter off a order block in that case. So right here would have been a still better opportunity to enter basically short, but still I'm content with the trade. I mean, I'm not really expecting that we will reverse just by sweeping the low right here. I'm still expecting way more lower prices, really relatively equal lows down here, also New York open kill zones as liquidity, so that's what I want to target. I mean, also the fact that we have a bearish SMT already being in play with session SMT, with session liquidity is a really strong bearish indication, so therefore I basically knew that we would not really try to take out the highs right here, and that we are going to trade lower. And I mean, the entry right here within the balanced price range would have been perfect. I mean, how we respect CE is perfectly in that case. Still, today to me that was really high consolidation in here, so really a tight price range where I did not want to really chase any trades in here or to force any setups. Basically, that's why I wanted to be a bit more patient and wait for the 10 macro. And we delivered lower, and I entered right here, put my stop above the upper quadrant of our order block, and basically what I'm now basically looking at with my new money management approach is that I want to take partials basically with after we reached basically a 1-to-1, and so therefore I could have already basically taken off 2 partials right here. I only closed one, not even right at a 1-to-1, but that's okay. That's what I basically did wrong today. That's what I learned today, and I think a perfect 2 contract partial would have been right here with a limit order at the SSL liquidity, because that's a reasonable price target for NQ to reverse, also with the basically with with the fact in mind that we are going to retrace basically of the regular trading hours 1 minute quadrants, which I basically showed you before. So that's why we are also having such a deep retracement. But I mean, I'm still content with the trade. I don't know if I should have managed it differently. I mean, risk to reward would have been insane, so maybe that would have been also a trade which are possible to hold with a more wider stop, because I think that's, or basically could have also managed it like that you take 2 partials right here, and I think because that's also and if you get stopped right here, it's basically break even, and you're also a bit in profit, because the partial right here would have been even more than a 1-to-1. So I think maybe that's something to think about, if that would have been an option. But to me, I don't know, because I think this retracement looks a bit scary in that moment, also because we now swept this liquidity. But I think because we cannot be done with that down here. I think it's reasonable that we will sell off. but yeah, I think to go break even and just be done for the day is also only what we need. So taking 2 partials right here would have been perfect. That's what I learned today. Then we had basically a low resistance liquidity run. That's what we wanted to anticipate. So we are done basically after we anticipated the low resistance liquidity run. Therefore, I did not wanted to look for anything else for today. And as you see, I mean, yeah, you could have looked for a retracement within our long close macro in here, but yeah, it's really against the trend. I mean, yeah, we traded higher, but for me that's not really a setup I want to yeah, go long off in here basically. So yeah, that's basically it. Hope you learned something new. I mean, I'm still content with today's trading day. I think it was just a bit more difficult trading day. Yeah, could have been definitely managed once again differently regarding money management, but I'm really content. I'm yeah, really disciplined right now, only trading 1 trade a day, and really basically yeah, trying to improve on in money management and psychology and so on. So I hope you enjoyed it, and see you soon.